After what seems like months of quiet from Mohnish Pabrai, he's finally surfaced again and given a talk to the students at Boston College. In my opinion, this is one of the best, if not the best, lecture that Mohnish Pabrai has ever given. He covers a huge swath of topics, including his book recommendations, the political landscape in China, and he even touches on Alibaba. But there were two really important topics that stuck out to me that I wanted to discuss. Both of these topics are interconnected, and the first part is Pabrai's recent thoughts about competition and finding monopoly businesses. And the second part, of course, is going to focus on Tencent. This will be the first part of a two-part series where I'll be covering these major topics that Pabrai talked about in his lecture. So in this video, I'll be covering Pabrai's discussion of competition, so be on the lookout for the second part where I will be covering Tencent. It definitely sounded like Pabrai invested in Tencent based on his discussion, so stay tuned for that. Of course, I'll leave a link to the full talk in the video description below, and I would definitely recommend you go check it out. And if you have seen this talk, please let me know in the comments below what part stood out most to you. Okay, let's jump into what we can learn from his recent talk. Pabrai opens up his discussion of competition with a reference to an old Peter Thiel talk, which seems to have been the basis for his more recent book, 0 to 1. The general notion is that 99% of all capitalistic endeavors is basically cutthroat, dog eat dog. And where the real sweet spot is when you can find a monopoly business. In other words, competition is for losers. According to Thiel, there is no reason why we should spend our efforts either trying to work for or invest in companies that are basically not monopolies. Because if you don't have a defensible moat, then in all likelihood, either the business is going to decline rapidly or your market share is going to shrink rapidly. So that kind of lines up with Pabrai's recent philosophy of finding wonderful companies and basically holding them as long as you can. I mean, there's no better type of company to hold than one that has a monopoly or an oligopoly in its industry and, can just basically print money. And according to Pabrai, he says that it's actually fairly straightforward and easy to spot these wonderful businesses. The simplest way to potentially identify a monopoly is sort of the Peter Lynch approach, where if it's a product or a service that you use in your everyday life, and especially if this is a product or service that pretty much everyone around you uses as well, then the chances are high that you're looking at a monopoly business. Of course, we can take a look at Apple and see that they have a stranglehold with your iPhone and the ecosystem built around that. Another pretty obvious example of a monopoly is Amazon. For example, I basically am price insensitive on Amazon. It's the first place that I go to look, and rarely, if ever, do I price compare with another competitor. You can even think about utilities such as energy providers or your internet provider. Another way to spot these monopolies, or at least verify your hunches, is to go straight to the financials. One great example of a company with monopolistic or, oligopolistic characteristics is Google. And it's pretty clear just looking at their financials. We can hop over to their financials and just look at some of their top line numbers, their revenue. Google is one of the largest companies on the planet, and the revenue is still growing at 23. This most recent fiscal year was about 13%. But these are really solid numbers for a company so massive. And we can also scroll down to the bottom line with the net income and see that it is still growing at a very healthy clip. For the past 5 years, it looks like the average is about 20, but in this last 12 months, it's actually about 30% growth. This company has a net cash position as well. They have $114 billion more dollars on their balance sheet than they have debt. Look at their cash balance growing over the past 5 years. I mean, it just only goes in one direction, straight up. Additionally, we can look at their return on equity and return on capital numbers and see that the trajectory continues to march upward. Even for such a company that is so large, it's still growing and returning high rates on capital. This basically screams a company with a competitive advantage. But it's not always the case that we can tell just from looking at the financials. For instance, if we go to Amazon, yes, their revenues are growing at a rapid rate, but their bottom line is not actually growing that fast. So we're still here hovering around the 6% mark for Amazon. Of course, Amazon is continually reinvesting, and if we look at their capital expenditure numbers, you can see that that number just increases year over year pretty drastically. If I hop back over to Google and we compare their capital expenditure numbers, there's really not a huge increase. Now, they do have some capital intensive characteristics because of their cloud business, but other than that, it doesn't look like they are spending too much money. But if we come over to the returns on equity and capital for Amazon, there's really nowhere to hide. These numbers are frighteningly appealing. So it does take a little bit more digging, and it also helps that we know that Amazon is such a dominant player. And in some cases, Pabrai can see it in the financial statements. He can see this moat that the company has, and he hasn't figured out what is the cause of it. So he has a company's portfolio called Rain Industries that he can see that they're the low-cost producer in their industry. But to this day, he's owned it for many years. He still doesn't know exactly what about that business makes it so. It is simply reflected in the financials. Pabrai also had this really awesome insight that companies with monopolistic characteristics do everything that they can to persuade you and the public and the regulators that they are not a monopoly. Google and Facebook will say anything to come across as just small fish in a really big digital advertising pond, for instance. On the other hand, the other 99% of businesses, the ones that, are in that competitive dog-eat-dog world, are gonna try to do anything to tell the public that they are the number one company. So something as simple as messaging or the lack of messaging coming from top brass can tell you a lot about the competitive position of a company. And I thought it was fascinating. In the talk, Pabrai covered how Jeff Bezos for the longest time basically didn't talk about AWS, Amazon Web Services, which is the number one cloud computing business in the world. It was crucial to get the first mover advantage in this space before other competitors entered the market. And by the time that AWS started reporting itself, Microsoft and Google were so far behind that it was very unlikely that anybody, and to this day, anybody's going to be able to catch up with Amazon in their cloud business. And on that note, Pabrai talked about how Nick Sleep and Casey Zakaria would basically just sit in their offices and read all day. And if you think of Warren Buffett and Charlie Munger, that's probably the image that comes to your mind as well. But one of Pabrai's counterpoints to this activity, and I'm not saying, and I don't think he's saying that reading isn't important, but sometimes you can't get the full picture just from reading annual reports. You really weren't going to understand how impactful AWS was going to be for Amazon's business just by reading the annual reports, because Bezos didn't talk about it. In that same vein, Pabrai has learned a lot more about Tencent by listening to the CEO Koos Becker of Naspers and Prosus. He's learned more from him about Tencent than he's ever learned reading through every single transcript written by Tencent from the CEO's mouth directly. If you haven't read 0 to 1 by Peter Thiel, I would highly recommend it if you want to dig a little bit deeper into that notion that competition is for losers. And as a business operator or investor, we want to be looking at companies with monopolistic characteristics. I'll have a link to that book in the video description below. So those were some of Pabrai's more recent thoughts about competition, and that segues nicely into his discussion about Tencent. So please stay tuned for the second part to this video, where I will be discussing Mohnish Pabrai's thoughts on Tencent's business. Anyway, there's a lot more in this talk, and I would highly recommend it that you listen to this thing multiple times, because I definitely consider it to be one of Pabrai's better talks that he's ever given. You really get to dig into his mindset and the way that his brain operates when thinking about understanding businesses, and especially high quality businesses. So definitely check that out. The talk is linked below. And if you liked this video, you may enjoy this video over here, where Frank Tabor and I did a deep dive into Tencent's business. Please like the video and subscribe to the channel if you enjoyed this discussion of Mohnish Pabrai's lecture. Thank you so much for watching this all the way to the end. I really appreciate your time, and I will see you in the next video.